part 3 and about the basics of stock ownership. This is really, really important. I'm glad that you stuck through with the first 2 videos, and I can't say enough. This is about obtaining wealth. This is a certain mindset. Now, one thing we've learned from this series, that when it comes to stock, it's more about ownership. Okay? Now, it's really like a trifecta when you think about it as it pertains to ownership. And so, when in that trifecta, that's stocks, that's real estate, and business. So it's just very important that we have a budget set up. All right? In addition to that, it's just also important that we already have our basics taken care of, as far as our emergency savings, our budget as far as how we take care of household items, our budget as far as if we have our business on the side, that we've already allocated the amount that's going to go to marketing and the time that it takes to go into that. Which brings me to an important point. When it comes to stock ownership, this is a game that you can play for life. This is not just, oh, I'm going to get a share of Apple, I'm going to get a share of Walmart, and then I'm going to see what's going to happen. Nah, I look at it like if you was rolling dice, it's like you keep playing, you keep the money down. All right, you may take a little bit off your profit. So in the previous 2 examples, I talked about how we basically are flipping $1, that was my example, $1 to $2, right? But we also learned in the previous videos about compound interest. So through dividends, we get payouts. Nothing happens to our principal. That's our principal amount. But dividends, we can get payouts of 25 cents, like every quarter. So that's 1, quarter 2, 25 cents. But if you have multiple stocks, so say times 5, then that is times 5. You know what I mean? And you have to do your own research. That's the key, but that's the art of it. That's the art of it. By doing your research and having a good portfolio. And when I say a good portfolio, that means basically different industries. And that's what you've heard someone say by diversifying your portfolio. Diversification. All right? That's just investing in different industries. I talked about in the previous videos, you want to get the Michael Jordans, you want to get the LeBrons of every industry. And some examples of industry, it could be health, it could be retail services, it could be defense. And that's why it'll be in your best interest to keep up with the economy, keep up with what the president or other leaders are saying, because what we want to do is we want to follow the money. They may say, oh, we're increasing the budget or decreasing the budget in this certain area. Or you may hear of a company, saying, we're going to make this new invention. If it puts you ahead of the competition, then you know the value goes up. You want to kind of jump on that. All right. Now, we talked about long-term investments, basically holding on to a stock for more than a year. But what they also have out there, that'll be day trading. I want to go down here. That'll be day trading. That's what some people, they trade stocks in a day, where they may have a stock, let's say it's valued at, I like to use $1 because it's more easier to understand. Say it's $1.25 and it jumps up to $1.30. They sell it, take that 5-cent profit. As I mentioned, if you got multiple shares, then you got that profit. The only thing is, with doing day trading or less than a year, is you have to face a bigger tax liability. So we want to keep all our money, and that's really what breaks down the difference. We talked about industries, we talked about diversification, day trading, how the dividends work, the value in stocks. That really just about covers the basics. I would tell you from experience, after that, it's like a guessing game. Nobody's really perfect. It's not an exact science. Now, they have excellent books out there. The Intelligent Investor is one I definitely looked at. But I look at different programs. Wall Street Trapper. In my household, on Tuesday, we watch Trapping Tuesdays. But they also have Market Mondays. That's what Earn Your Leisure. And there's other, you could do your research. There's so many, dozens, probably hundreds of people that have their respective programs, and they're just valuing stocks. It's just a game, and there's different groups, and they all, it's funny, we're talking about trading, but there's different groups, and they're just talking about trading information. As long as it's not illegal, that's insider trading, where people are, like, we're basically the managers, because we broke down the corporation. We talked about the board of directors, okay, and that's basically who manages the company, because the owners, that's how we get our shares. But if someone that was inside the company, like a manager or a middle manager, was sharing like information before the public gets it, that's why earnings report and CEOs doing interviews, also just speaking on behalf of the company. If something happened, like there could be a spill, there could be an employee did something that was sexual, anything could bring the value of a company down. People just keep up with that stuff. It becomes addictive to an extent to keep up with what's going on, so that you know the value of a stock. And I would just say, latch on to what's comfortable to you and how people portray that information. Also look at different websites like Yahoo Finance. I trade on the platform personally with Robinhood, but you also got E-Trade. That's actually a level up. And if I'm telling you it's a long-term game, that's where you can get your kids involved in it, because if you got an account where basically you can co-sign on them, then you can start them off at a young age, so that in 20 years or 30 years, their account has grew so much. Like I said, you keep investing. It's not a one-time thing, so that, say in 20 years, you're like, dang, I came up on $1 million. I came up on 6 figures. I came up on multiple 6 figures just by investing a certain amount of budget. My budget percentage is 10% automatically goes to savings, but 10% goes into investing. Okay, and as long as we got that trifecta going into your business, going into stock ownership, then that cash flow that comes from the business, the cash flow that comes from real estate, dividends can be invested in these percentages. And now see, I believe that as it relates to money, there's only a certain amount that we should save or have an emergency save before it's like, now we're playing that rich game where that money is being reinvested. And there's a saying in the book, Rich Dad, Poor Dad, that when you're able to acquire so much wealth, then you can take on more risk. Or you can, let's say you say, going from this $1 example, your investments are now at $100, or you can now take out of that. Say you got to $1,000, and you can come back to, I could take $100 out. Now, instead of playing it very risky, and you playing it really safe, and your returns are, they're normal for the most part, you can start investing in more riskier plays where you can have like 13% returns, 16% returns, or 25% returns, or you can take that $100 out of the 1,000 that you've been accumulating over 3 or 4 years, or less, you could take that money and you can invest that in your business, and basically you're making your money work for you. And that goes back to what I was saying in part one about having a wealth mindset, and then having basically you using your resources or that cash flow to basically your money is working for you. Because in these days and time, there's really no such thing as money. I know I'm getting a little bit off subject, but it's really important that I break it down that there's no such thing as money. There are numbers on your account that they tell you that you have, but banks are banking on that you're not going to pull that money out, and so they invest it out the back door. If they are investing your money, then it's in your best interest to have that mindset that I'm going to invest in my money, because there's really nothing that we're saving. The gold standard is gone. So I hope everything we talked about with the basics of stock has been valuable. If there are any insight that you think I missed, any questions that you have, please leave it in the comments so that perhaps I can have a follow-up to this video. I thank you. Y'all be easy.